Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning market webcast. Okay, so we've had a little bit of a market move. Look, I did a bunch of videos last night. You got to check out my Twitter, check out my Instagram, check YouTube, the whole thing. We were out with a couple things last night, and I mean, basically, what I said was this. We had all this compression that we were discussing, and it was all basing in and around the lower Bollinger Band and in and around the 50-day exponential moving average. Well, the coin was in the air. It landed tails. The bears took advantage, started to convert areas, and you had this really, really deep push that really accelerated hard into the close. We haven't seen that kind of acceleration in a long time. This whole we haven't had a 1% close thing. Well, that's over. And we are now down in and battling around the 200-day exponential moving averages. The darker line is the exponential. The lighter is the simple. You can see they're both about 6 or 7 handles apart, down in the 2760s. Okay. As I take you over to the hourly chart, you can see compression, expansion. Today's about a battle of the 200-day. We shorted most of the day yesterday. It was an 80 handle day. So far tonight, last night into tonight, it's only about 15 handles. I was only trying the long side last night, and first at 70 and then at 50. So for me, this whole 2750, 2755 area has got to reveal itself, but it all centers around the 200-day moving averages. If these 200-day moving averages want to be resistance, then we're going to continue with some downside. If they want to be support today, then we can bounce. How far do we bounce? I mean, a good guideline in these situations, in my experience, has been the second standard deviation lower band. Your second standard deviation lower band is sitting at around 2807. I would expect this area, the second standard deviation lower band, to act as resistance. It's what I call being in the channel. The channel for me is the area between the third standard deviation band and the second standard deviation band. During these violent moves, whether they're up moves or down moves, we tend to hang around in the channel for a couple of days. Then we work our way back inside the Bollinger Bands, and then price will dictate what the next move is. But we've had a major move down. I didn't slap 4 standard deviation bands on this thing, but I think I might later just for fun to see if we hit them. We did do that, I think, at some point in February. So the nice part is it's a very volatile market. The thing I want to impress upon you, and the thing I was trying to impress upon everybody last night over on social, was it's a volatile market. I mean, do not do anything really stupid. Like go to bed last night with a naked position. We were long 52. We took a bunch of profits before we went to bed. I had a stop on. I got stopped out while I was asleep. I mean, the thing was on its way. It traded to like 77, not quite 80. It was the trade that I wanted to be in, but Europe opened and they dumped at 30 handles because that's what volatility will do. Same thing on the short side. Don't run around with no stops, naked positions, and then don't take your stops and make, we use 5 handle disaster stops in the room. And even in the process of making 80 handles, we did get -5 one time. Now you wrap that in with 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 19 winners. But I mean, that's life. That's how it works. Volatile markets, volatility works both ways. I cannot impress that upon people enough. Okay? Don't get lazy. All right? So as we head into today, the 200 days got to matter. You got to keep an eye on the second standard deviation lower band. On the downside, 47.25 is the low of the moment. If they seal off the 200, you break the 47, then things start to get deeper. It's for either side to take at this point. Either side to take, but I don't think it's out of line to see a minor bounce up to the second standard deviation lower band. And so far we're long and we're profitable from 55. Why 55? You had matching lows at 54.5, 54.75, and that was that was what it was gonna that's what it was. And that was after a higher low at 52.75 and then the 47 quarter. So we'll see if they can move this higher, at least up into the open, and then we'll take it from there and see where we are. Everybody have a fantastic day. We've had a lot of people come in. We got a lot more people coming in. There's always room for more. If you trade this stuff regularly, trading this thing in a vacuum right now is not a really good idea. If you don't come see us, go see somebody, because when you're left with just yourself and your brain, you can make mistakes. Don't make mistakes. Respect price, respect risk. It's a great community, and we're just really glad in times like this that we can help people. All right, take care. I'll be out with a ton of stuff on social. Have a good one. Trade 'em well. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.